What's going on, YouTube? I'm Mike with Penner Investments, and today I'm going to discuss daily, weekly, and monthly credit spreads. These are great for smaller accounts as they do not require large amounts of capital, and they have a defined risk as well, which is nice. Be sure to hit the like button, share this video so others may learn, and subscribe to my channel so you do not miss out on future content. All right, let's dive in. This past week, I entered into 3 different trades with credit spreads. On last Monday, 11/21/22, I entered a daily credit spread with the QQQ that I've been trading for a while. I sold 10 QQQ puts with a strike of $277 expiring the next day. Collected $390 in premium, and then I turned around and bought 10 of the 272 strikes for $80. This credit spread gave me $310 less the trading fees. Not bad for a one-day trade. On Monday, when I entered this trade, the QQQ was trading around $282, and I was pretty confident the QQQ would not pull back $5 in one day. The short-term sentiment in the market has been bullish, which made me confident entering these trades. Another of my favorite stocks to trade is NVIDIA. The same Monday, I also entered a monthly credit spread with NVIDIA. I sold 10 of the $140 strike puts with an expiration on 12/23/22 and bought the lower strike, $135, to create the spread and bring in a credit of $1,280. On Monday, NVIDIA was trading around the $153 range, and the stock has been bullish recently as well. So I was pretty confident in entering this trade. Then also, just this past Friday, the day after Thanksgiving, 11/25, I entered a weekly credit spread with the QQQ, selling the 276 puts and buying the 270 puts for a credit of $530. It's a little bit further spread than I typically do. I went 6 wide instead of 5. I just really had a goal of collecting at least a $500 premium for this weekly trade. The QQQ was trading at 287 when I entered this trade, and I was pretty confident that it wasn't going to pull back to the 276, my higher put strike. I like to diversify stocks that I buy, but I also like to diversify into different strategies as well. I like to mix in some credit spreads to make some daily, weekly, and monthly cash to also go along with my buying and holding strategy, my put selling, and covered call strategies. As I feel we're going to see what is known as a Santa Claus rally into the end of the year, typically the stock market will continue going up until around Christmas time. That's why they call it a Santa Claus rally. I'm waiting to continue selling any more covered calls, as I don't want to sell them here before the Santa Claus rally starts, if we get one. Let's talk about managing these credit spreads. Based on the spread, for example, the $140 puts and the $135 puts have a $5 wide spread. With option, everything is 100, which means my risk for this will be 500 per contract minus the credit I take in. What I like about this is it gives me a defined risk. I watch over what the market is doing throughout the day to see where the prices is going on these trades that I'm entered in. And if you don't have the ability to sit there and look at the market several times throughout the day, you can always set it up, set your trading platform to send you an alert if it reaches a certain price. For this example, I'd want to start being cautious if NVIDIA is dropping around the $141 mark, as my higher strike is 140, which then will be starting to get into my profit if it starts dropping much below the 140. The market is not bottoming out there or reversing from here and continues down to the 140 mark, I'll just simply close the trade right there. This way I'm minimizing my downside risk, and I don't have to worry about taking a maximum loss on the trade. The key to growing your account is letting your winners ride and cutting the losers early when you're trading credit spreads. So that's why it's important. As soon as it hits my higher strike when we're doing put credit spreads, I go ahead and just close the trade and get out. If I'm winning 8 out of 10 times or 85% of the time and cutting the trade that is turning against me immediately, I'm not risking taking a maximum loss. Then I let my winners expire 100% profitable. This strategy starts to bring in some serious money over the long term. Well, I hope this has been helpful. Good luck trading. And as always, if there's anything you want me to discuss, be sure and drop a comment in the comment box. Thanks for watching.